everyone. Thank you for joining us today. Appreciate everyone joining. We're going to give just a few more minutes for people to come on, but I appreciate you joining us for shifting gears from revenue to efficiency. So we've got people joining. Just give it another minute as more people are joining. All right, let's go. Thank you all for joining. I'm Lucas Haldeman, CEO of SmartRent. Really excited to be with you today talking about what I think is an incredibly timely subject for what's going on in our market. We sort of had this, maybe 10, almost 11 years of incredible rent growth. And really 2 years ago, that started tapering off. I think we're into, we call it a new paradigm, but I think it's also back to the same old paradigm as we've been in before, as we're in that part of the cycle. I'm really excited to be joined by Susan Garrock, Jay Denton, and Wyron Bobus, and we're going to take you through some prepared slides. We've got a chat box down below and also a Q&A box. So as you're going, feel free to participate in the chat. We have Jacqueline monitoring that, and then if you have questions, and which we'll take at the end, feel free to put them in the Q&A box as we go. With that housekeeping, I think we'll kick it off and get going, Jacqueline. Few audience reminders. Let's go to the next. So I'm going to turn it now to Susan and Jay and Wyron to give a quick introduction, then we'll jump into it. So Susan, let's start with you.
Absolutely. I'm Susan Garrock, Senior Vice President of IT and Chief Information Officer at Elm Communities. We're based in Bethesda, Maryland. We own and manage properties in DC, Maryland, Virginia, and Georgia. And we're a publicly traded real estate investment trust. We have 9,600 units under management.
That's great. Thank you for being with us. And Jay?
I'm Jay Denton, Chief Economist at Radix. We work with properties all across the country to help them streamline their market survey process. And I get the privilege of then analyzing that data and figuring out what's happening on a little bit more broader scale. So I'm excited to share that with you here today.
Yeah, big fans of Jay, your work in Radix. I think it's really important, especially when we're in these sort of uncertain times. Thanks for being with us. And Wyron?
Hello, everyone. Wyron Bobus, EVP of Operations here at SmartRent, based in Scottsdale, Arizona. Obviously, I have a prop tech firm, and in my functions, I'm in charge of our supply chain, our installations, our implementations, support, and so I get to certainly see what our customers are dealing with in terms of deploying the technologies out there, as well as what they face in the everyday usage of those, and ensuring that they're getting the best return on their investments.
Great, thank you, Wyron, for being here. And so we have some interactive stuff through here. So we'll start with give a quick overview of the perspective of what's going on. So I think everyone knows what's going on. We've had a shift from rent growth to now rent growth slowing. And it's really about how do we optimize our performance? How do we reduce expenses? How do we watch the dollars going out? It's also on a backdrop of supply still coming in. I think we'll see that through 25. So there's a lot of supply coming in, which adds more to softening rents, as well as increasing in property taxes and insurance costs. So there's expenses we can't control that are going up, and it puts an even broader focus on really being thoughtful about what we're doing. And I think this is a great opportunity to kind of revamp your entire business model. But let's turn it to the experts. And I'd ask Jay, maybe with the research that you do, maybe you can give us some macro commentary, but maybe give it with some micro numbers.
Sure. And I'll mostly focus on the broader themes that we see happening. I can guarantee you, of all the people dialing into this, each of you are experiencing something a little bit different. Some of you are fortunate enough to be in some of those places around the country that are already starting to see a little bit more stabilization, but that is not the common theme that I would say most folks are experiencing right now. So to start at the very top, what's influencing the space? You just mentioned it, supply. I end up doing other presentations outside of the multifamily industry on the overall job market and the economy. I was with a group of HR and recruiters recently, and I've done a few of these where I'll even, when I'm outside the industry, I'll ask, on your way to this event, did you see an apartment property under construction? And even people not in the industry, everyone raises their hands. And then I walk out the door and realize there was one right across the street. I mean, it's, so there's a lot of construction happening everywhere. There's a lot of housing needed. So totally understand it. But this is, it's the most, I've been in multifamily 20 plus years, easily the most I've seen, most people in the industry have seen within their lifetimes. And so supply is ramping up. It's probably near the peak, but it's been rising. On the other side of the equation, there's been a lot of really strong demand for housing, specifically for multifamily, but the economy and the labor market has slowed a bit from what we've seen a couple of years ago. So you've got the two broad forces are at odds with where we had really preferred them to be. We're seeing those numbers now play out in the key, KPIs you would look at within multifamily. So if we look at rent growth as an example, nationally at the end of May, rents were down for new leases. That's where I'll focus most of the time. For a new lease, they were down 1.5% on average from where they were a year ago. Some places are, like I said, a Washington, D.C. or a Boston or Chicago doing a little bit better, where maybe it's around 2%, but not the really strong growth rates like we saw not just a couple of years ago, but even before. You mentioned it. It's been a nice run for the multifamily industry for quite a while. Even the better performing markets are still struggling to get back to what a long-term average would be, much less in Austin or an Atlanta or a Raleigh, where rents are down 5% year over year. I spent a couple of years where I budgeted for hundreds of properties. I budgeted revenue and rent. We would hardly ever plug in negative new lease growth for a single property, much less the average for the whole country. So really different period than I think just about anybody on the line has really gone through probably in their careers outside of maybe the Great Recession. So that's what's happening on the rent growth side. So on new leases are down to try to capture whatever traffic is out there. Occupancy rates right around 94% nationally. It's getting a little better. We are seeing some slight upward movement in occupancy, but I'll tell you, as long as I've tracked the market, when we were adding jobs and the economy was in positive territory, you would typically see a little bit, more of a seasonal increase in occupancy rates. And it's been fairly flat compared to what we normally see. So some slight bump up, a little bit more flat. One of the reasons properties simply are not getting as much traffic this year as we would typically see. If we look back just to last year, which was also a softer year, on average, properties have one fewer tour per week. That doesn't sound like that big of a deal, does it? One per week. If you add that up over a whole year, properties are essentially missing on about a month or more of traffic they would typically get within a year. And so I think it leads a lot to the discussion that we're going to have today. This is not going to clear itself up in 2024, maybe in some places in 2025, but I was just in Phoenix a couple weeks ago or a month or so ago, and the discussion there was even 2025 is going to be a bit of a challenge in the industry. So, from my perspective, I've been looking at this a long time. I think now more than I've seen in my career, companies are going to be looking for, our traffic rates are down. What are things we either have or we could add to the properties to make them more appealing so that we get more traffic? For whatever traffic we get, what things do we need to convert the traffic to a better rate than maybe what we have before? If we can't make it up on that revenue side from an NOI perspective, are there certain levers we can pull that will help get us more in balance compared to what we originally expected? And I would think that that's a lot of the type of conversation we're going to have on the call today.
Yeah, that's great color, Jay, and I totally agree. I think that is where we're going to take this conversation. Let me turn to Wyron, because you brought up sort of doing more and being more efficient with less, and that as a technology guy, that sounds like technology to me. So let me ask Wyron to comment on some of the technology trends we're seeing, and then I'll turn it to Susan.
All right. Yeah. Thanks, Lucas. Yeah. With those pressures in terms of rent and occupancy increases, obviously, turning to greater efficiencies and lowering your costs is paramount, right? As well as figuring out what are the things that would differentiate your properties and certainly help you to attract and retain the residents. So, there's a few things we've got to go and look at, especially where technology comes in play. One is something that is non-negotiable is the tenant experience. How do we get that either the same or better, honestly better, so that we can, be better in terms of attracting versus the competition. So, things like, smart home automation, things that, people have gotten used to in their lives nowadays, things that allows them to go and, control the various aspects of their living, whether it's temperature, lighting, security, things also where high friction events, can certainly be made easier through technology. So things even right from the beginning where when residents are looking at properties, things like self-guided tours, as well as, when they're part of the community, package deliveries is certainly one of those things that, there's a lot of movement in terms of the technology that can make that into a better experience. Things also for the tenant experience, the communication, using chat bots on your websites and your mobile apps so that you can have 24/7, 365 support. So residents can feel a sense of security and satisfaction that things are getting taken care of and responded to in a timely manner. The other thing, obviously, is operating efficiencies. There's technology that you can leverage to go and make your efficiencies better, and really efficiencies doing more with less, or certainly doing more with the number of people and resources that you already have. But certainly you can utilize smart home automation to go and monitor and do preventive maintenance, as well as do better with energy management. It certainly automates certain manual tasks in terms of when you're turning residents, lease in, lease out. And then the other thing that you can certainly do with operating efficiency improvements is like with maintenance, right? Whether it's preventive maintenance, whether it's task execution, monitoring of the requests of the task and whether they were completed or not. That's certainly a big cost driver. And then the other thing that all of this technology can do is to also help drive data-driven decision-making. All the technology, whether it's property management software or IoT devices or other digital tools, certainly gives the owners and operators a treasure trove of data that they can mine for tenant preferences, maintenance patterns, energy consumption, those kinds of things. So all of those really drive into the two things that are really important, right? One is the enhanced resident experience, and obviously doing so with greater efficiencies and lower costs. So that's certainly the technology perspective that I can provide at least a brief overview today, Lucas.
That's great. I think so. So it's a great pillar on the technology, and we got Jay had some great macro stats and on the national. So Susan, let's go to you, the operator, and sort of say what are you seeing in your portfolio, and as you talk to other operators, what's sort of the word on the street?
I think every other owner operator would say it's a lot easier to keep someone in your apartment than to go and find a new resident. Not only from an ease standpoint, but from a cost standpoint. So, keeping our residents happy, keeping them satisfied is a big area of focus. And we definitely focus very strongly on retention. But we're really hearing three major things from our residents and potential residents as well as to what's important. And certainly a seamless experience, not only in working with us, but in living in our community. They want to be able to use technology to communicate with us, to manage their home, to manage their relationship with us, to reserve amenities. So that seamless experience, or what we like to call the Amazon experience, where it really is 2 clicks and you have exactly what you need. That's what people are looking for today. They're also looking for safety. We hear this all the time, that safety is really important to our residents. So a lot of the things that we are seeing around access control, around the smart locks and smart home technology, a great example. I heard a story last year where a community team said, oh, our residents just leave their doors unlocked for their dog walkers. And they were horrified by this, because what a security risk to do that. And to be able to set codes so that the dog walker can come in at a particular time on particular days, knowing that that code doesn't work on Saturdays when you're at home. That's a real peace of mind for residents, and it provides, once again, that seamless experience. And I think it also comes down to savings. Our residents, are certainly paying us for living in the communities, but they're looking to us to say, how can I make this the most cost-effective living experience that I can get? And if they can control their thermostat, if they can control their lighting, if they know that we as a community are controlling those things and managing those things well, that really helps keep the costs down. So I would say those big 3, a seamless experience, safety, and savings, are the things that we are really hearing and seeing from our resident base.
That's just really great color, Susan. I really appreciate that, and it makes a lot of sense. I think you're sort of keying in on our first poll question, which I'm going to go to in 1 second. But I agree. I think we've all hit the shift of let's focus on renewals. So we wanted to ask everyone on the line, and we'll do our first interactive poll. Sort of, how has your attention to renewals changed in the past 12 months, or I'd even say 18 to 24 months? I mean, I think there was a time where we were, not that we wanted to see turnover, you don't want turn, but that the new replacement leases were so much higher. It was like, well, we lost somebody, but we're gonna make it 10 or 11% bump. So I'll let people answer now. Feel free to click on the result, and then we'll go to the results one in a few minutes. I don't think I get to vote for our group, so. We'll give a few more seconds to vote, and then we will move on to the next slide, and we'll see the results later on. Here are the results. So far, 13% no change. That's surprising, but then I think the rest, 50% greater focus, 25% greater focus. So all in on renewals. Yeah, so I think you're seeing that the bulk of the portfolio, the bulk of the operators out there, renewals are really a key focus, as Susan also just told us. So let's go to the state of the market. And Jay, I'm going to turn it over to you, please, to take us through some of a little bit more detail on the state of the market.
Yeah, and we covered a lot of it already. I'd say just a couple extra notes that I would add. Renewals were brought up. It's obviously the focus that we just had there. I would look at it as 86% of the audience said they're focusing on renewals more. Only 13-14% was not, no change. So generally what we're seeing would be renewal rents are still in the positive territory, but from what we're seeing and observing, especially the publicly traded companies and what they report, that renewal rent growth is slowing a bit, to Susan's point of let's do what we can to make sure that we keep those folks in place. We do also believe that's one of the things causing traffic to be a little bit lower than it has been in the past. So if someone's staying in their unit, they're less likely to go tour other properties. So that's one component of it. Another that's causing traffic to be a little bit lower would be what I mentioned previously about all the new construction. You have more properties for the same amount or slower growing amount of people in terms of who's going to be out there actually looking for it. Supply, as I mentioned, from an overall standpoint, right now, we show year over year, as of the end of May, roughly about 600,000 units delivering on an annual basis. And it all is not absorbing so far this year. So some of the key things that we're really going to be watching, it's not just about when the new supply delivers, but about when it gets absorbed. And so I think that's part of the challenge that we'll be watching through the remainder of this year and early through next year, where we're already talking about 2025 being challenging. Even if supply is down, you still have all the lease-up units to absorb in the market. So those will be some of the key things. I would say as we do start to turn our eye to 2025, because what's really funny about this industry is leasing season is almost over in many places. That sounds really weird because we just finished May, but your peak number of leases typically will be in May and June, and after that it starts to slow down, and then those become occupied, a month or so later. So really, we're almost starting to turn our attention to 2025, and as I mentioned, it's going to depend on location. But several places will still be in this place next year where I think they're going to be looking for other ways to either boost rents or revenues or pick up traffic wherever they can. One more note that I'll give, and as it relates to some of the commentary that we've had so far around particularly smart home devices. This is such a mainstream thing to talk about. It was on the Today Show this morning in terms of when people are thinking about it's summertime and consumers are still trying to figure out how to balance their budgets from the inflation impact over the last couple of years. Utilities are up and they're trying to figure out, well, how do I lower my utility costs? And that's obviously one of the ways they highlighted on that show that millions of people are watching. So we think of it, and here today we're talking about a multifamily issue. This is a broader consumer issue that people are trying to solve.
Yeah, it's a great point. I think really the consumption of utilities and apartments is just now starting to get even more attention. We're seeing markets go to where they're putting fee structures in place and actually finding owners. And so we've got to get ahead of this. But you're right, Jay, it's not only for the owner and the operator, it's great for the resident. And I think that part of what Wyron is touching on of getting that renewal and getting that, and Susan brought it up with the resident experiences. If you're happy where you are and you feel like, hey, my owner's helping me save money, I'm feeling good about it. Yeah, I think you are less likely to go out and look, and it gets a little bit stickier. So it's a very interesting trend. And then I think, Susan, maybe a little bit more color from you on sort of what you're seeing this year as well on peak leasing and traffic.
It's really fascinating. And I know from looking at the attendees today, we have people from all over the country. And I think what makes this industry so fascinating is just how different it can be from one part of the country to another, and how quickly one area of the country can be hot and great and wonderful. And then 6 months later, why would anybody touch that? that particular marketplace, for a while it's like, the coastal markets, they're dead. The Southeast is where everybody needs to be. Well, we've got a huge supply issue happening in the Southeast, as we talked about earlier on the call. And now all of a sudden, the coastal markets are looking a little better. And hey, the Midwest is having their moment in the sun as well. There's a lot of emphasis and growth in those markets. So it's it really seems to trend in a lot of different ways. A few years ago, all you heard about is, Austin, Atlanta, these are the places that you need to be. And now those are areas, where we're seeing a lot of oversupply, and you're seeing your Class A new delivery rents, really, because they're trying to get those leased up, bumping up against the Class B rents. So, it really, it is, I feel like it's pretty volatile right now.
Yeah, I'll say, Susan, it's, in my career, it's one of the biggest spreads, I would say, between the top performing markets and the bottom performing markets that I've seen. And it's so interesting because broadly, we're still adding a lot of jobs. And in periods where the economy adds jobs, rents don't go down. It's just, but part of it is a lot of rebalance for just how different the last few years. But you touched on several there. You look at the greatest demand markets that are out there. I made this point when I was in Phoenix that you can't be a huge job creator without also being a huge supply market. It just, you have to have both. So your Phoenixes and in Texas and in the Southeast, where you have all this population growth, all this job growth, you also have to have a lot of supply, or people don't have anywhere to live. And so we're in this period where there are certain places that are just overheated from that perspective. And then others, like you mentioned, the Midwest. This is the first time in my career where I've seen those markets in the Midwest at the top of the rankings. And I love being able to talk to operators up there that are used to, just that nice, steady sort of climb instead of a little bit more volatility. And right now, because of that, they're more towards the top of the rankings. So yeah, I would say it's certainly a different ranking order and different set of variety of growth rates than I've seen in 20 plus years.
That's great. Yeah, great color. I think we're definitely in kind of uncharted waters. And let's go to a next poll question. So we have another poll question here, and you can select multiple here. But what current market trends are you seeing at your communities? And so, are people asking for flexible lease terms? Are you seeing occupancy going up? Are you seeing turnover go up? On a macro level, we're not seeing that. Rising maintenance and operational costs, I think we're all dealing with that, and insurance, and then greater interest in amenities. So we'll let people have a minute to go and vote on those. I think, another amenity that we haven't talked about that I'm hearing a lot more chatter about and anecdotally seeing around Phoenix, Scottsdale is we still are way undersupplied on EV chargers. I think that's another trend that really hasn't been fulfilled yet in multifamily, of that there's a little bit waning demand for EVs, but some of that might be because people don't have a place to charge them. There's a little bit of a chicken and an egg discussion to be had there. And I can tell you, looking at the Tesla charging stations around here, they're always full. And, primarily those are renters, because if you live in a single family home, you have an electrician come and put in a charger at your house. And so not being able to charge at your apartment community, I think, is going to be another headwind. All right, let's take a look at what people said. So definitely seeing an increased demand for flexible lease terms, and I think that's normal in a cycle where we want to sign more leases as we get more open to making exceptions. We want to sign a 12-month lease, but we also don't want an empty unit. Higher occupancy rates, not seeing that as much. Higher resident turnover, not seeing that as much, which sort of fits with what Jay's been sharing on the macro data. Rising maintenance and operational costs, up 71%, and we're definitely hearing from our customers. And greater interest in amenities, 20%. So I think that's really interesting results that we have there. Anyone have any color on that? Okay. Good. And these polls will be posted online later as well, so we can go back and look at them. So 94% current occupancy rate nationwide. I think Susan, Jay, you've both kind of alluded to this. I mean, that's the national rate is interesting, but it is such a micro occupancy rates are such a micro market thing that it's good to have on the slide, but it's not really illustrative of what's going on where you have properties. But Byron, I want to turn it to you. Just discuss the process of the shifting focus from revenue to efficiency, and what you're hearing from a lot of our operators that are using the platform. Some of the color you've seen.
Yeah. With the headwinds we're seeing with occupancy and rent growth, obviously there's, and we've seen the poll right there, right, that the rising operational and maintenance cost is certainly what a lot of folks are experiencing. So if the revenue is certainly not covering for that, then obviously there's got to be a greater focus and emphasis on lowering costs and better efficiencies. So, we've got to start looking at, like, how can you do more with less, right? And can you leverage technology to drive greater efficiencies? There's many, many ways to do that. You can look at, the property management efficiencies, things like the property management softwares, the maintenance platforms that allows, better and more efficient execution of maintenance tasks, risk mitigation, water and fire detection, security monitoring, and then look at energy management. With the use of some of the smart home automation, certainly hearing from customers that is certainly certainly helpful. It's smart thermostats, smart lighting, smart HVAC systems, solar panels, and then with access control also, smart gating, building access to the amenities, smart door locks, which certainly takes away a lot of the manual tasks at turns. So certainly a lot of that is coming into play. There's a lot of pressures in terms of costs all across the board because of the inflation that everybody's experiencing, and that goes really into every sector that our owners and operators are dealing with. So again, it's you got to ask that question of is the technology and the process improvements worth the return in the investment? Something also to think about is that all of those improvements and efficiencies cannot be at the expense of the tenant experience, right? That's the ticket to the dance. You've got to go and at least maintain that. And honestly, like if you're going to deploy and invest in new technologies, how is that going to enhance that even more and differentiate the properties so that you've got a better experience for your residents? And then finally, with the technologies, it's got to be something that over the long term, it's got to make sense, right? It's not something that you obviously go into lightly. It's a big investment. A lot of times it's a lot of also change for the way that your folks operate. And so that's got to be taken into consideration. The deployment and the change management is going to be critical, as well as ensuring that that doesn't affect negatively the resident experience.
Yeah, I think that's great color. I think one of the things I want to just double click on, and I've got a question for Susan, is just really that initial maintenance. So one of the things that I found fascinating is when I was in the single family rental side of the business, one of the things we enjoyed in single family homes is lower turnover mark to market on market rate multifamily. And there's a lot of underlying demographic reasons for that, but where we saw high turnover, and we would go dig in because it would be alarming to see, high turnover. The highest turnover came from if a resident had either 2 or more maintenance issues in the first 90 days, or a maintenance issue that stayed open longer than a week. Those are my 2 quadrants of. So literally, this is a year later. They're moving on, and we could chart it back to, hey, in the first 90 days we didn't set the tone with it. So that's our initial view of our company was negative. And really getting ahead of that and really focusing on that, we were able to actually pull that retention in. And so we had sort of a SWAT team that said, hey, this is a 911 sort of emergency. We have a new resident. We got to make sure we're sort of over communicating and overdoing it. And I think now with the maintenance tools, one of which we offer, but this isn't a commercial, but there's lots of good options. We're much better at tracking that. And so I'd encourage that. And why are you saying, we need to do more with less? That's always hard to do. I think we're seeing it with some of these new staffing models that are out there around, not needing so many leasing agents and potting. But Susan, I wanted to turn to you and sort of give us a real world update on. I know Elm, you've been working on that long ahead of this slowdown, and I think you're farther ahead than a lot of operators. So maybe share some color on how you've been able to have some success with that potting and new staffing models.
Well, just to really reinforce what you all have just talked about, it really is that perfect combination of people and technology, and knowing where one starts and the other one stops. And that's been our real area of focus, is how can we use technology to really enhance that resident experience, or that potential resident experience, while at the same time freeing up the people that are on site to really focus on taking care of the resident, on taking care of the community itself, really removing those very redundant tasks that, if given a situation at a community, we can all have the best of intentions coming in. And if emergency comes up, you know what? You might forget to follow up with that resident that you promised you would follow up with the day before. And really taking advantage of technology to do a lot of that work for us. One of the things we've really been focused on this year is the fact that, going back to that renewal question that we've been talking about this whole presentation, is quite often many of your residents actually are happy with you. But you don't know it, and because they're not the ones that are calling you, that are emailing you, that are upset, that are writing a negative review. They're happy, and they're the ones that you really want to keep happy and focus on. But you're really not communicating with them. You might communicate with them when they move in and when they move out, or when you're doing your renewal. And so we've been really focusing on developing that relationship with our more passive, our quieter residents, and reaching out proactively and saying, using technology to do this, but saying, hey, how are things going? Is there anything that we can help you with? And then really being able to resolve those issues that we were just talking about. Do you have a work order that is taking a long time, or that you feel like you haven't gotten the proper attention? You're making sure that those things are taken care of, and using technology to do that. That frees up the people on site to focus on that customer experience, while then also moving a lot of those very accounting heavy, those very tedious day-to-day tasks into a more centralized model. And that's something that we have been doing at Elm, and we're really excited as far as measuring the results of doing that, and doing all those things like deposit accounting, doing all of those things like renewals, and all of the different pieces of the follow-ups for maybe late payments and those different kinds of things, taking those off the day-to-day community staff and really putting them with a group of people whose passion is in that area and can focus on that and make sure that it gets done, so that you ultimately have happier people in the communities and working at your communities and happier residents.
I love that. That's great stuff, Susan. I especially love, I think, people focusing on how do you sort of stay proactively communicating with the satisfied masses is just a great takeaway, and one we often forget. We always have those residents who we see more than we'd like to of, and they're kind of the squeaky wheel. And I agree, we can't take our eye off of, hey, we want to renew that person who's satisfied and make sure we're keeping them there. That's really, really great stuff. So some real world perspective as we're moving into peak leasing season, or as we're kind of in the midst of it. Let's give some real world sort of color on what we're seeing. And I think, Jay, let's start with you, because you have such great data at Radix, sort of. And I know you shared a little bit of this already, but maybe a little bit more color on what you're seeing.
Yeah, and in terms of renewals, I think we've covered a little bit of it so far, and Susan did a great job. It's just like in your typical business that the customer you already have, it's easier to keep them than it is to go find another one. And so it seems, I would say industry-wide, some of the things that we've talked about on this call are generally, I've gone to several conferences within the industry, whether national or regional or local, and these are all the trends that people are really focused on. I would say renewals overall, and then how do we think about getting certain operational costs under control, as well as becoming more efficient using technology. So I think in this call, we're hitting on all those key themes. The interesting thing in the space right now as well that I haven't touched on as much would be concessions. And so typically renewals do not get concessions, which is another reason why the shift has been more to keep the person you have. Many markets, I would say, if I look at more of the extreme markets that are out there, one of the reasons renewals are so important in a market like San Francisco, and particularly the Oakland side of the Bay, for a property to offer 2 to 3 months free rent for the new lease that comes up is not that abnormal. Now, in most other places, it's maybe a month, give or take, but that's why renewals become so much more important depending on which location you are around the country, because of just how soft the conditions are given the changes in supply and demand right now.
Like that's great. And Susan, any examples you wanted to share?
For when I think about a lot of what we're seeing, we've talked a lot about the economic situation earlier in this call, and a lot of our residents are saying to us, I want to rent with you, but please help me make it possible. And so really looking at creative things around security deposits, looking at providing residents with the option to pay their rent, not all at the very beginning of the month, but be able to split that up, so it really works with how they're getting their paycheck. We're seeing a lot of that as being things that our residents are really valuing when they think about leasing with us, and saying, hey, you're making it easy for us to do business with you. And I think, that's something that we all need to look at, as well as, obviously we are in this business to provide people with a home, to make money, but we also want to focus on, how do we make this a good relationship?
I think that's great. I think this is the time where it's good to get creative. So let's go. I know it's been great content. I'm going to go to the last poll question, and we're going to not pause too long on it because I want to make sure we leave a little bit of time for questions. So what retention strategies have you implemented in the past year, and what are you working on as owners and operators? I'll give people a second to do that. We've heard from Susan and Jay on some of these. I think it is one anecdote as we're waiting for votes to come in, Susan, is it is funny that the centralized accounting just makes so much sense, and you touched on it, but it's funny to think a lot of the trajectory of careers people have had in property management is I start out as a salesperson, I'm a leasing agent, and I'm selling and I'm personable, and then suddenly I get promoted and I'm asked to be an accountant. And you're like, well, that's new. I didn't know I was going to be an accountant. I'm assistant property, and then you get the property manager, which is sort of actually more a natural extension of back to taking care of the residents, taking care of the property. And I think just centralizing that, removing that step is going to be good for our industry. And so let's see what the poll results say. So pretty well split. Resident rewards and incentives is the biggest. So that goes to exactly to what you were saying, Susan. Flexible lease terms we've talked about. I think centralizing leasing is an important one. We've seen public companies they've come out and said they've reduced their leasing staff by more than 40% by implementing centralized leasing and self-guided tours. So really, really interesting stuff. And I'll go to our last slide and ask just Wyron to go quick, just a couple thoughts on so we can get to a few minutes to questions of sort of, what are the sustainable solutions? So I think sustainable is the important one. I think we're all trying to figure out what do we do that residents are going to like. What do you have for some of this is from NMHC Grace Hill. Wyron, give us a few ideas of sustainable solutions.
Yeah. Again, kind of going back to the whole cost equation, right? And just going with the poll there and just tying that there. The lower your cost, the greater your efficiencies, the more you can afford to go and do those rewards for your residents. But in terms of sustainable solutions out there, certainly a lot of folks are really wanting connectivity. Lucas, you talked about EV charging. Certainly that's one of the outcrops of making sure that you have a good infrastructure for connectivity within your property, and it also then is a good backbone for all the things that you can implement to go and automate things and take advantage of the automation and devices out there that will allow for more efficient operations of your properties. Certainly renters enjoy living in their communities. That's been proven in polls before, 85% here. High-speed internet access is something that 90% of residents say is as important as air conditioning. They desire the creature comforts that are are given by the modern features and amenities. So, things like shared workspaces, high-speed internet are certainly very important for folks. So yeah, those are the kinds of things that, looking forward, are going to be very important, as well as, making sure with all the technology that people are using, if you can make sure that integration is happening between all the different tools that you use, that can certainly lower your costs and, again, make the experience better for both your property staff as well as your residents, because you're going to gain even greater efficiencies if all those different tools are working together, integrated in a much more efficient manner.
Yeah, it's a great point. Making sure that you're offering the resident the experience you think you're offering them, and that it actually integrates and is seamless is super important. We're almost out of time. We're out of time, but there's one question I just want to throw to the group that was submitted. There were multiple questions submitted. I think we'll have time for one, but Monica asked, and I'm going to paraphrase a little, but basically we put out our base rent, but then we have pet rent, we have technology fees, we have other fees on top, and your base rent basically isn't the rent that you're paying. Question is, do you think we're losing prospects to the competition if we're doing that? Should we embrace all-in pricing? And just curious, Jay and Susan, your take on that as we close out. I think it's a really interesting question of what is the right pricing strategy. So maybe Susan, with your what do you think about that?
Well, it's becoming, and not to get political here on the call, is becoming a very hot topic. In the government, and being right here in DC, we certainly hear quite a lot about it, and whether or not multifamily is going to be the next big focus area. Certainly as the travel industry has been, we've heard a lot about, you see the airline price or the hotel price, but then by the time you get to the end of it, it's so much more than what you thought you were getting. And it sounds like there's going to be a lot of focus in that same area from a multifamily standpoint as well. So I think from an industry standpoint, it's something we have to pay a lot of attention to, as to whether or not we're all going to be asked to follow the same guidelines as far as revealing those kinds of fees. I think, for me, this is my personal opinion, not Elm's opinion. I think, we should be as transparent as possible, although it makes it hard if you're being transparent and your competitor's not. So it'll be very, very interesting to see where this goes.
Yeah, I agree. I think it's a really interesting question, and definitely not one that we worked out as an industry.
Yeah, I would just add on that it's part of our focus at Radix that we feel like even with concessions aren't always as transparent, easy to figure out based on what's posted on a website of sometimes which unit or which specific floor plan. And it's part of our focus. I would say very similar in terms of my personal opinion. When I use consumer sites or products where I'm able to get to the final price the fastest, that's the place I stick to. Like, I want to default to just give me what the final price is. And so I think eventually, whether it's in a year or 10 years or however long in the future, I think that's what consumers want, and who will ultimately gain from it will be those that make it as transparent and as easy as possible.
That's great color, and we're over time. I think this has been a really great discussion. I really appreciate Jay, Susan, Wyron, you doing this with us, and great chat that we've had going on. And I thank you all for joining, and look forward to talking to everyone soon. Thank you.